All right, guys. Good morning. Good morning. We got jobless claims, unemployment. I'm starting at about a minute late. My bad. I'm over here working on stuff in the background, but I'm here this morning. Uh, yeah. So I'm seeing some news right now that says that the former Fed official Bullard says they have spoken with Treasury Secretary Besson about the Fed chair job. So a lot of people vying for that next FOMC job. We'll see what happens with that. So we did have some news that dropped earlier. That Let me see where to go. That the U.S. and European Union reached an agreement on a statement outlining a trade deal. So not really a trade deal done, but a statement outlining it. They agreed on the broad terms of it, essentially. The U.S. and Europe is going to consider steps to ensure secure supply chains, including tariff rate quota solutions. The U.S. and European Union commit to address, quote, unjustified digital trade barriers, with the EU agreeing not to adopt network usage fees, US and EU to consider cooperation on ring fencing domestic steel and aluminum markets from overcapacity, and they also are going to negotiate rules with each other of origin to ensure the trade agreement benefits predominantly both partners. European Union companies to invest an additional $600 billion across U.S. strategic sectors through 2028, and the EU intends to procure $750 billion U.S. LNG, oil, and nuclear energy products, plus at least $40 billion of U.S. AI chips from September 1st. The U.S. is going to apply only MFN tariffs on EU aircrafts and parts and generic pharmaceuticals, ingredients, chemical precursors, and unavailable natural resources, and the U.S. will lower tariffs on autos and auto parts when the EU introduces legislation to enact tariff reductions. The EU intends to eliminate tariffs on all U.S. industrial goods and provide preferential market access for U.S. seafood and agricultural goods. Senior U.S. officials expect tariff relief for the EU automakers to come hopefully in weeks. U.S. is going to levy 15% tariffs on most EU imports, including autos, pharmaceuticals, semiconductor chips, and lumber. And they're going to release joint statements locking in details of trade deal reached last month, according to Newswire. So that news just came out like 15 minutes ago. Yeah, they talked about thinking about having a potential trade deal, potentially, maybe, could be. Maybe they did. That's essentially what I'm seeing by this, but it's good. At least they've agreed on some things. Yeah, I mean, at least they agree. Agreeing is good. It's better than some of these other countries that we're dealing with, which is not necessarily their fault, right? But if we could agree, that's good. That's good. That's optimistic. We'll see what happens. But yeah. We had EU Chofik says joint statement with the U.S. on framework trade deal marks a step and could grow over time to cover more sectors. Let's do a poll here. All right, so we're going to do a poll. Does today's jobless claims show a stronger or weaker labor market versus expectations? That poll is now live. You can vote on it directly here. And again, we got jobless claims, unemployment. This all precedes tomorrow's Jackson Hole Symposium. Yeah. Here's to you guys. All right, we got 9 minutes left until 7:30 in the morning. Honestly, dude, my HIMS trade doing really, really, really well. Target up to almost $100 a share right now. It's at 98.50s. Remember, we bought this thing at 94s yesterday morning. Very nice percentage gain overnight, short term, HIMS trade is up as well. We have an average price of HIMS right now at $41. $41. It's currently almost at 44. A very large percentage there too. You love to see it. You love to see it. We're also still in Crocs. Remember, we bought Crocs last, like a week or two ago, early August. at 75. It's almost at 85 right now. So some of these dip buys that we got involved with, I mean, most of them have made me money at this point in time. Like percentage wise, we're doing really, really well. You guys saw me hand pick a lot of these stocks. Some of the chat helped me too. I mean, they mentioned some of these. I looked at them. If I liked it, I bought it. And yeah, they were solid. We did have some earnings that released early this morning. Specifically, we had some big earnings. Walmart missed EPS, came in at 68 cents versus 73 cents expected for earnings per share, down 7% there. Revenue did come in a little bit better than expected for Walmart at 177.4 billion. And Walmart is down pretty significantly from it, under $100 a share now. I don't think I'm going to buy this one though. We'll have to look and see what's going on here. But we also had Billy, B-I-L-I, BDPS in revenue. We had a couple other earnings come out this morning. All right. All right, looking at our poll here, we asked people about jobless claims. Got almost 100 votes already. 63% say weaker, 37% say stronger. Hey, what's up, Sam? My HIMS trade's still underwater. Yeah, I averaged into HIMS on the pullback. I thought it would eventually bounce, and it did, and that's one that I could probably hold longer term. Like, if I really want to, I could probably hold that one longer term if I really want to. Somebody said I was getting heavy the other day on stream. Kind of offended by it. I feel like y'all just can't see my lower torso. And so, like, if I cut it off right here, my shoulders maybe making me look a little bit larger than I am. You know, that's all right. It's okay. Target rate probabilities for September down 79%. It might be living in my head, dude. It might be living in my head. Maybe I'm self-conscious about it, bro. You know, y'all won't tell anybody. Y'all are my therapists here, right? And then my internet friends. I honestly know really what it was is that somebody said that and I forgot about it, and then I was making a video this morning and I looked at myself on the, like, if I look at myself like, look, so this is how I normally look, right? But if I cut it off right here, or hold on, if I cut it off right here, I think it's my shoulders. Like, I can kind of see what they're talking about if I cut it off right here. So I kind of agree with them. I do look kind of funny if I cut it off here, which is funny. Are they actually a public company, JX? If the job report comes weak, I'm hiring. Yeah, I mean, tomorrow's big. We got the Jackson Hole Symposium. Yeah. Tomorrow we got the Jackson Hole Symposium. Over the last few weeks, we've had weak labor report data. We've had high inflation. A lot of people are talking about stagflation now, which is an economic condition in which we got high inflation and weak labor market. It precedes a recession sometimes, not always. And so a lot of people are talking about that now. You care way too much about what other people think. That hurts, man. That hurts, dude. No, I mean, everybody cares what other people think, bro. Anybody, the people who care the most about what people think are the people that go around telling people they don't care what other people think. If you didn't care, you wouldn't say anything. You want people to think you don't care about what people think, is what it really is, you know? Because if you didn't care, you wouldn't say anything. Everybody cares, though. It's human nature. All right, so looking at rates, I'm just kind of trolling you guys a little bit this morning, as I should be, I think. But when we look at rates, we're at 79%. We're actually under 80% for the first time since the really weak labor report came out. I blame Jerome. A lot of people blame Jerome, but the problem is that, like, if Jerome didn't send out those checks as well as didn't stimulate the economy at that period of time, people would be crying about that as well, right? So people would be upset that they would say the Fed's not doing anything, they're just waiting, you know? Like, if we didn't do all that stuff, we would have entered a deeper recession, and then people would criticize them for that as well. So it's a sticky situation in that regard. Like, there's not an easy option here. There's not an easy option. Do you think they should have stimulated the economy during 2020? Let's first ask that in the chat. Do you guys think they should have stimulated the economy in 2020? Sure. I see a yes, and absolutely, a yup, and absolutely. They had to, yeah. No, I agree with you guys, 100%. Now, the real question is, do you think they should have sent out stimulus checks in 2020? That's the nuanced one. I don't know. I think that probably caused more inflation than anything else. That one's probably kind of divisive. Yeah, PPP loans were an absolute mess. I got one at that period of time as well, you know. But I was honestly doing like okay because I worked from home at that point in time, you know. Inflation was worldwide due to the 20. Yeah. Well, I mean, the 2020 inflation was not just from the checks, of course. It was from the quantitative easing that we did. It was from the supply chain problems that we really had. Like, things were shut down. We had supply chain problems. That's what spiked inflation fast. Supply chain issues, you know? And so with those supply chain issues, you know, prices got expensive. They went up. Prices went up, understandably so. And those are the prices we're still dealing with to this day, because prices don't really go back down like that. And so, yeah, and looking at other markets this morning. Palantir and Nvidia are back up a little bit. Look at Palantir right now. People were talking about the demise of Palantir. Look at it. It's back up to 160s almost. Nvidia sitting at 176, rebounding a lot. It was at the low 170s yesterday. Walmart, again, down after a bad earnings report. Some other stocks are moving today, but tech remains under pressure. We've had a 2-day sell-off in tech stocks and stuff like that. So tech has been, you know, dropping. Globally, markets are kind of mixed right now. The dollar is pretty steady. Japanese stocks are down. Australia, South Korea are a little bit higher. So again, everybody's kind of watching. The whole world's going to be watching for Jerome Powell tomorrow. The whole world's going to be watching for Jerome Powell. I don't get why they don't just legalize cannabis and all that money can just cover all that. Well, it's going to take time, you know. I'm for legalizing cannabis. I think when you prohibit something that a lot of the world wants to use, it just creates illegal markets. And then that actually boosts crime, not dwindles it. You know, and you know, when you have something that's objectively less harmful than many legal things that are out there, it just kind of becomes a ridiculous, hypocritical thing at a certain point. You know? But somehow, sometimes the law's like that. CoreWeave, how's CoreWeave doing? People are talking about CoreWeave. CoreWeave at almost $95. Maybe I should have bought this one down here. It's still down a lot, though. This thing's down almost 50%. Yeah, I mean, I don't necessarily dislike CoreWeave. It's just highly volatile. More volatile than Nvidia, that's for sure. You know. Abercrombie and Fitch announced a collaboration with NFL linebacker TJ Watt. You know, what I think some companies might be doing is they might be looking at American Eagle and then copying that. And so we'll see what they say now. See if they come out with a like that. John the Kind. That's me. So we got Fed Schmidt. Officials, he says officials will be watching August and September inflation data. Policy is modestly restrictive and appropriate. Yeah, they're going to be looking at this month and next month's inflation. Again, PCE inflation next week is going to be big. PCE inflation is going to be incredibly important next week, guys. Incredibly important. It's something that you want to watch. We got next week, we have GDP data on Thursday and then PCE inflation on Friday next week. It's important. You want to watch it. We got Nvidia earnings on Wednesday as well, which are also kind of crazy and big. So what's today's data? Today's data is jobless claims, unemployment filings, right? So when we get unemployment rate, there's a little bit of lag to that. It's usually the previous month's data. Jobless claims unemployment is a week-to-week update to unemployment filings, is what it is. So it's a more real-time look at unemployment. It's every Thursday. Today, jobless claims. I'll put this up on the bottom of the screen. But today's is expected. Wait, let me see. Yeah, today's is expected at 225K. Last time was 224K. So I'll put this actually scrolling at the bottom of the screen. All right, so we got this scrolling at the bottom here. 225K is what they're expected at live at 8:30. Powell just might cut tomorrow. Nah, he's not cutting tomorrow. That would be an emergency cut. He's not going to do that. It's certainly not polarized enough in one direction. We got high inflation and weak labor market. And so it's kind of ambiguous what we should do. He's certainly not going to do an emergency cut at Jackson Hole tomorrow. That's just not happening. Dive into SWBI. I don't know what that is. No offense, but this is like an obscure penny stock that's been downtrending for years. I'm good on this one, brother. I'm just not investing in it. I don't invest in stuff like this. It's just too risky. This thing's really been downtrending since 2021, bro. And it doesn't really hold its gains. Most of the time, it's actually trending downward, it looks like. So I'm good on this one. This is, oh, yeah, I'm good. I actually see what it is, but yeah, I'm good. I've got the same mic. I've had this mic for a minute. Nasdaq yesterday, yeah, we had downward trends here. We're still trending down. We're under that 23.3 level now. We got less than an hour. Let me put a timer up. timer's pretty close. PMI is good today. Yeah, we got PMI data as well, right? Let me make sure. We do have PMI data. We also have the Philly Fed survey. Bostic should actually be speaking right now. Let me take a look at this. We could have Bostic speaking right now. Yeah, so the EU trade chief says the door is not closed forever on US wine and spirit tariffs. Nvidia price target was raised to 205 from UBS from 175 and with a buy rating. They see fiscal quarter 2 revenue to be in at $46 billion, which is a $1 billion beat, better than expected. Quarter 3 guidance between 54 and 55 billion, excluding China, up to 57 billion, including China. Supply chain checks suggest compute plus 20 to 25% quarter to quarter, plus or minus 7 to 8 billion. In networking revenue at 6 billion in the fiscal quarter 3, up 1 billion quarter to quarter despite 800G shortages. They say some reusable H2O inventory on China, plus new Hopper wafer orders. UBS thinks a Blackwell China version possible if US eases restrictions under rare earth deal. Now they're just putting out expectations for next Wednesday for Nvidia earnings next Wednesday. We'll see what it means. Bitcoin loses 112 at any point. It could get aggressive. Yeah, Bitcoin, man, it's looking really weak. 113s. I mean, this doesn't mean anything. This is a very small pullback for Bitcoin if we look at the larger picture here. But yeah, we'll see. Yeah, so I saw what Schmid said. Schmid said officials will be watching August and September inflation data, and that policy is currently modestly restrictive and appropriate. Mostly is what he said. So I got that one already. We covered that a little bit. We'll see if he's right. Do you guys agree with Schmid here? He said some cooling in the first quarters, but there's optimism now. He says, I'm sure that Cook will handle matters as she needs to. The labor market's solid. So. Mickey D's. Yeah, man, McDonald's $300 a share. Starting to creep up. Gold got up to almost 3,400 yesterday. It's now at 3,375, so it's down a little bit. Yields, if we take a look at yields right now. Let me refresh this. Yeah, yields are still a little elevated relative to where they were yesterday, I think. Yeah, so yields are still a little elevated relative to where they closed yesterday. They were over 4.3% if you look at 10-year treasuries right now. But they're basically flat. Slightly higher. I guess people are this is what I think is going to happen, to be honest. Bostic is speaking right now. Bostic says the world is very much in a transitional period, end quote. Bostic, Raphael Bostic. But again, this is what I think. I think that the market understands that Jerome Powell is probably not going to be as dovish as a lot of people are pushing for, including the current president and administration. Right? I think a lot of people recognize that Powell's probably not going to sing the same tune as the current administration tomorrow at Jackson Hole Symposium. He's probably going to be data dependent / hawkish / neutral / modest. He's going to refuse to commit to cuts, I think, and that might make yields go up. And so I think traders are baking into that ahead of, in terms of yields, because a higher interest rate sentiment, yields are going to go up with a higher interest rate sentiment. With a lower interest rate dovish sentiment, yields are going to decrease, right? I think traders and investors and everybody are baking into that potential outcome tomorrow. And if for some reason Jerome Powell tomorrow comes in incredibly dovish, loose, fears labor weakness, then we'll see yields dump down. But I don't think that's necessarily going to happen. And maybe I'll eat my words. I don't know. But that's what I'm looking at now. That's what I think we've seen these drops from this week, is mostly specifically from the market just getting baked into Powell, hawkish Powell tomorrow, which I think is what we're going to get. And we had 4,000 people here plus yesterday for Fed Minute. So I appreciate you guys. Thanks so much. Shout out to you all. Again, Bostic still speaking. Bostic says inflation remains well above the Fed's 2% target. That Fed policy has been positioned to return inflation to 2%. The world is very much in a transitional period. Steel and aluminum are also key areas to seek in the tariff deal, according to Trade Chief Seth Chofik. Yeah, Powell said data dependent, yes, and labor market was weakening for April to July. However, CPI was hot, PPI was burning hot. Time to cut, not sure. Right, we're somewhere in the middle. Inflation's elevated. In order for the Fed to get the real green light to cut rates, they need a really weak labor market and they need inflation stability, right? And we've seen CPI stability. CPI was relatively normal, which is consumer prices. CPI stands for the Consumer Price Index. But generally, one of the things that precedes consumer prices in terms of influence is PPI data, because it's producer prices and eventually businesses pass on the cost to consumers, and thus we get consumer inflation from producer inflation a lot of the time. And so PPI data was incredibly hot, bad, 0.9% month over month in core and regular, way higher than expected, almost 4% for core CPI year over year. And so yeah, the core CPI was not good. They need those job numbers negative and unemployment skyrocketing. Yeah, for sure. I'd rather have hawkish Powell than much higher inflation. Yeah, it's somewhere in the middle for me, but yeah. I mean, I'm worried about inflation as well. I think you could probably argue a cut with balance. Like NQT and pause, or cut 25 and don't NQT. Like, do whatever you want to do there, but balance is fine. Right now, we're pausing at restrictive levels and doing quantitative tightening, which are both hawkish, restrictive things. So I'm about balance right now, I think, but I think you could probably justify a small cut as well. And based off of labor market data, as well as, again, we're supposed to get a big revision early next month in September. That is something else I'm kind of worried about right now. If we get a big revision in September, it might make people even more fearful of a weak labor market. I believe rate cuts would be detrimental at the moment. Tariff effects on inflation and effects on employment are not yet clear. Yeah. You think the Fed will cut rates in September? I think it's probable as of now, but it's going to depend on what we see over the next 3 weeks. And so I think it's probable as of now, but it's always subject to change based off of data. And tomorrow we got Jackson Hole. We're going to see where Jerome Powell is. Next week we have PCE inflation, which is the Fed's preferred inflation metric. We'll see what that looks like. We also have GDP data on Thursday next week. We'll see what that looks like. We also have Nvidia earnings, which is not really a look at the economy, but it is a look at one of the largest companies in the world. And if the markets start going down, we might get even more of a push for cuts. And then we have those labor report. We have a labor report next month, early next month, and then we have a big revision supposed to come out a couple days later. So we will see. But that is what I think is going to drive whether we cut rates next month or not. Rate cuts will raise bond rates. Yeah, maybe. All right, NASDAQ still testing this recent low down here at around like 270, which is the low of the day. So this is actually the low of the day here at 270 right now. We're edging closer to it. Treasury yields, yeah. Well, it depends on which picture you're looking at least. At least as the Fed rate right now isn't historically high. Yeah, I mean, if you take a look at like the 80s, sure. But if you take a look at the last 15 to 20 years, we're modestly restrictive right now in terms of rates, right? We can take a if you take a look at the federal funds rate, it depends on which time frame you're looking at. If we're comparing this to the 80s, sure, we're not elevated at all. Here's 80, almost 20% rates. So, you know, compared to that average, or when you include that in the averages, sure. But if we take a look at the last 25 years, this box, we are here. But like I said, we're modestly restrictive. We're a little bit higher than the average if we take a look at just the last 20 years, which I would argue is a much more relevant picture of things, business and economy. So, yeah. We're restrictive, I would say, right now. It just depends on the context of what. Higher jobless claims means green day. Lower jobless claims also means green day. Or they both could spark red action. Higher jobless claims signals a weaker labor market. Maybe the market wants rate cuts, and that's good news. You know, and the market goes up. Lower jobless claims means less people filing for unemployment, a stronger economy. Maybe that makes markets go up. Both of those things can make markets go up or down. One of them pushes for rate cuts. The other one justifies pausing. And so it depends. All right, so look at this bounce here. We're bouncing off this level. How many unemployed people do you know? Not many. A couple. All right, Nasdaq's flushing down here, guys. Look at this. Crack lows again for the Nasdaq for the NQ. We want a rate cut, so higher jobs claims would be good. Maybe. Market rational, yeah. Don't know the direction, but I think it'll definitely be a massive movement in markets. What, Jackson Hole tomorrow? Probably. We'll see. All stocks aren't overbought, only AI. Yeah, I mean, you could argue AI stocks are overbought. Some of the PE ratios are kind of crazy, but I think that's more of a look at the future of technology versus I think people understand, I said this yesterday and probably the day before, but I think people understand that whoever controls AI is going to run the world within a couple decades. And so what you see is all these big tech companies entering that market because they recognize it's the future. And they're competing with each other, so they're trying to grow the coolest and the best AI systems that everybody uses. It's kind of a race to the top. And as long as they program defense mechanisms into this AI software, then I'm okay with it. But if they're not making a priority on making sure these systems do not have defense mechanisms, that's a problem. That's bad. You don't want to see that. As long as they're doing responsible things, which, you know, multi-billion-dollar companies probably are. I would hope they would be. But again, it's a race right now. And so sometimes that takes a back seat to growth. And that's what I don't want to, you know. There is, in terms of hours, there's 40 minutes left. So, in terms of hour, there's about 66% of an hour left. Just to give you a percentage. But yeah, there's about 40 minutes left until the data comes out. It's expected today, again, at 2:24. Or no, at 225. The previous reading was 224. You see a timer also down on this, on that side on the bottom left corner. Will this data affect crypto? Maybe some. See. Bostic's still speaking. He says next year we should start to see energy come back. Every central banker should expect to get yelled at. GDP growth this year will be relatively tepid. By the end of the year, there'll be enough clarity for businesses that key decisions can be made. I still believe the underlying state of economic fundamentals is robust. Business contacts say costs are going up, but transmission to prices is inconsistent. One rate cut for this year is kind of still where I am. The Bostic thinks we're only going to get one rate cut this year. Yeah, we got PMI data later on today. Oh no, I'm sorry, Sam. My bad, bro. Yeah, I have to make sure to change it to all because I missed some comments for sure. Yeah, PMI data is the Purchasing Managers Index. It drops at 9:45 this morning. It's going to give us a signal into what manufacturing looks like, right? So services and manufacturing is what we're going to get a look at. Over 50 generally means expansion in those sectors. So if PMI comes out, just as an example, at 53, that's a slight expansion. 60 would be a big expansion, right? If manufacturing comes in at 45, that's a slight contraction in the manufacturing sector. And so that's how you read the PMI data that comes out at 9:45 today. We'll cover it as we always do, but yeah. Not sure what you're asking, Kay. Today we got jobless claims unemployment data. Still got 30 minutes, chat. Hey, good luck with that pawn. We'll see what happens, bro. All right, I'm still looking at 73. Maybe it's a Lenny. Good job, Star, I guess. I want semiconductors. I always forget the symbol here. PSM. Yeah, I mean, it's down pretty significantly here. It's down from 250s, 240s down to 220. Under the 200 exponential, see if the trend's changing. This 275 level here makes sense, but this is the low of the day right here. Will the mortgage rate drop if the Fed cuts? Kind of. Mortgages can kind of be based off of yields a lot of the time. And so if the Fed ends QT and MBSs, that might make mortgage rates drop. But there's also an indirect effect just in terms of sentiment and sympathy and some other stuff that indirectly affects mortgages. So the answer is yes, but it's nuanced, but yes. Yeah, and in the Fed minutes report that we covered yesterday, there's a couple things that we talked about. there's a couple things we talked about yesterday. So like the Fed minutes report came out. In terms of policy, of course, rates were paused. Balance sheet runoff and quantitative tightening continues. We had Bowman and Waller dissenting. They wanted to cut, shows dovish cracks, of course. Inflation at the time was stuck at 2.5 to 2.7%, and that tariffs are now a visible upward force according to them. They said jobs were still strong, but softening in private payrolls and youth unemployment was like a red flag. Growth was tepid, housing was weak, and businesses are cautious. But there's upside risk to inflation, and that is more of a risk to downside jobs risk, according to the majority of people. Again, markets are going to be watching Jackson Hole for clarity. September cut odds still remain pretty high, over 75%. And that's basically what the FOMC Fed minutes report showed yesterday. So, what do you think of MU? I think MU's grown a lot. It's a good microchip company. It's still kind of a lagger relative to some of these other ones, but it still had a pretty nice long-term trend, especially in the AI boom we've seen over the last 3 years. Not an investment professional. I'm not liable if you lose. Understand all this stuff on screen, guys. I can't guarantee anything. Don't copy me. Not an investment professional. I'm not liable if you lose money. Always make your own assessment. Trade smart. Just understand all this stuff on screen. But yeah. Remember, rate hikes were at the peak. Mortgage rates peaked at 8%. Yeah, because mortgage rates and yields are going to immediately react to rate hikes. Pizza. Yeah. Yeah, I don't know anything about REAX symbol. It looks like a downward trending penny stock. But honestly, the pullback's not that bad. It's only been downtrending since late last year. So maybe there's an argument in a dip buy. In terms of charts, I don't necessarily hate the chart, but it's also a penny stock, and so you have no freaking idea what it's going to do. I'm not going to buy it regardless. Good luck. I hope you make money with it if you're in it. How much clarity will we have after Friday, and for how long can we ride that clarity? It depends. Like with most things in markets, here's the 8 a.m. scrum right now. Let's see if we do anything. But like most things in markets, it depends. Depends on what Powell says. Powell might say, hey, I'm not giving you any information. I'm neutral. I'm data dependent, which is what I think he'll probably say. And in that regard, I think the market will interpret that as a hawkish, restrictive thing. That means less odds for rate cuts next month. And in that regard, we might actually negatively react to it. I think that's actually probably why the market, along with like the labor report revisions and a potentially hawkish Powell, like I said, tomorrow, I think that's probably why the market has been decreasing over the last 2 days. Last 2 days, we've had red market action. And I think that's probably the market getting baked into hawkish Powell potentially tomorrow at 10 a.m. That is my guess. What do you guys think? Do you guys agree with that? I would say that's probably what's going on. But I don't know. Is there any chance they raise rates? No. Yeah, I don't think there's any chance they raise rates. Why do I not think they're going to raise rates? Well, because we've had such weak labor report revisions. And so if they raise rates and the economy tanks, people are going to be mad at them. And so I don't think there's any chance we raise rates. As well as I don't think we should raise rates. The labor report weakness signs that have been emerging over the past couple weeks show that we should not raise rates, of course. You know, but Powell actually in the last FOMC meeting said that we're lucky they don't raise rates, essentially is what he said. And so, yeah. Inflation was wild too, though. You know, PPI inflation was weak, but I don't think a PPI reading is enough for them to justifiably raise rates. We'd have to see weak PCE, like high PCE data, high CPI data. We'd have to see we need to see the PPI data reflected in consumer prices, which might be coming, right? Which might be coming. Is weaker good? Weaker in what regard good for the markets? Yeah, Powell was hawkish last meeting. All right, so we might start shorting some of this weakness here. We bounce up to 275. I'll short that. Ooh, I need to bounce up to it here. Yeah, we're starting to break down here. Testing lows of the day. We're starting to flush down. There's a crack in the lows. We got 30 minutes left until jobless claims data, so we still got some time. So here's that bounce. Let's see if we can get it. All right, dude, I'm getting rid of my mouse pad. It ends up just making it so I can't move fast here. All right, I'm gonna start shorting this. I gotta be careful though if we start pushing up. All right, this is good. I can hold this pretty close to break even now. I'm gonna use my previous, what I wanted to be my entry as a risk now. I'm gonna cut half of it there. It might reject and we might add more to it, but just for risk, I should wait. We rejected right off of 73s. I should have waited for that entry on the first half of this, but that's all right. We're green still. This is what we wanted. I just didn't quite wait for my entry here. There we go. Can be filled there. You know what? I'm just gonna cut that. All right, we're out. We're green. We got exactly what we wanted here, which was a rejection at 270. This blue line is essentially what we were looking at. Slightly green on the day, but not a huge amount. All right, so we got the Jackson Hole Symposium, which kicked off. Really, it kicked off today. But yeah, so they'll have the full agenda that's going to be available tonight at 8 o'clock Eastern. Powell speaks tomorrow at 10 a.m. Eastern. And we'll be streaming this live, of course. Yeah, gold popping up a little bit here. Gold's rebounding. It's back up to 33.81s. What's the risk reward? Is probably about a 1-to-1 trade. I just wanted to look for a rejection and a retest of lows down here, and that's what we got. Risk would have been up here at like 80. but we ended up managing it a little bit different. But the original idea was to short this, use this level as a risk, this level as a reward, and just kind of scalp a 1-to-1 ratio. Gold's starting to push up. We're at 33.82 still. Gold's rising. All right, guys. We got some Holt talking about Fannie Mae and Freddie Mac. Asset valued at 7.8. Assets are valued there at 7.8 trillion for both of them. I doubt there'll be a cut. Again, it's going to depend on a lot of different things. Chief, are we getting rate cuts next month? If yes, then why is everybody bearish for September? September is called the September slump because a lot of the time we trend negative in September. A lot of people don't think we're going to trend negative this month, but again, it's going to depend on a lot of different things. September's a pivotal month for economics and federal policy. Monetary policy. It's a big month for that. We got the September Fed meeting. We've got a revision of payrolls early in the month. We got the labor report, which a lot of stuff is riding on. At the end of tomorrow, we got Jackson Hole Symposium with Jerome Powell giving us our first look at what they might potentially do in September based off of a weak labor market and high PPI inflation. And so September is going to be pivotal for sure. Early September, we're going to see labor reports and revisions, which can wildly influence things. And then later on in the month, we're going to get the Fed meeting. And then, we're going to get PCE inflation at the end of right before this month ends. We're going to get NVIDIA earnings right before this month ends. And so what the market and how the market behaves is going to be really, really watched over the next few weeks. Trying to sign up on Top Step, but asking me for a promo code. So I think the promo code, if you want 25% off, you can use dash DASH 25 dash space 25, all caps and dash. And I think it'll give you 25% off if it's your first time buying it on Top Step, is what I think. You see a Palantir type scenario. What do you mean Palantir scenario? Like a big sell-off? All right, guys, we got 20 minutes before jobless claims unemployment. We got about 1,000 here right now. Walmart says tariffs impact on consumers is muted so far, but comp sales were consistent throughout the quarter, and Walmart is keeping out prices as low as they can for as long as they can. Still getting some breakdowns here. All right, guys, 19 minutes left. What's with Bitcoin going down? I mean, I think Bitcoin's correcting. I think one of the reasons Bitcoin is going down is because Bitcoin wants like rate cuts and QE to benefit it. And so if we get more hawkish data, if we get more higher probability of a hawkish Fed, I think Bitcoin's going to react negatively to that. And so I think that's the main reason we're seeing Bitcoin pull back, along with it's just been testing highs for a minute off and on. So hey, thank you, Ramsey. Appreciate the $5 donation, brother. Appreciate it. People are going to have to start shopping at... I don't think the dollar store is going to succeed, bro. I just don't. Dollar store is one of those businesses that I do not think is going to last. But thank you for the donation, Ramsey. I appreciate it. Yeah, y'all hit that subscribe button. NVIDIA has a habit of dumping on earnings regardless of the outcome. Yeah, it really does. But it kind of moves up outside of earnings sometimes too, so it's balanced. NASDAQ is still flushing down here. We got a small green trade in the books today. I don't think so, Todd. With all due respect, I think Dollar Store is a brick and mortar store that sells a bunch of things that most people, and I'm going to say most, this is generalized. There's always outliers like small towns. But the Dollar Store sells things that most of the younger population buys online. And that dynamic and that percentage is going to continue to shift more and more and more and more until the Dollar Store, the Dollar General, essentially goes out of business, in my opinion. Right? I might be wrong about this, but I think this is pretty obvious, to be honest. Like, I think it's pretty obvious. I think it's kind of self-evident what's going to happen here, just based off the dynamic of online shopping, Amazon, and others. And like, listen, my grandmother used to take me to the Dollar Store. My Mimi, we call grandmothers in Louisiana Mimis a lot of the time. My grandmother used to take me to the Dollar Store. Some of my best memories with my grandmother. And so I actually have a soft spot for dollar stores. But I have to look at it objectively here. And I think objectively, that dynamic is going to continue to get worse and worse and worse and worse until dollar stores go out of business. I haven't felt the need to step into a dollar store in a long time. And when you go in there, things aren't a freaking dollar anymore. And so, sure, I think the older population in small towns still uses the dollar store. Especially in which Amazon warehouses are farther away. And so you don't have as efficient as shipping systems and infrastructure in some of these small towns. But one of the things that's going to happen is that Amazon's going to continue expanding. And that dynamic is going to change as well, where you're going to start to have closer warehouses, more efficient shipping, closer warehouses, more efficient shipping. And that's going to be worse and worse and worse and worse for brick and mortar dollar stores. That's my guess. I think it makes a lot of sense. Maybe I'm wrong. Dollar store might rip up, might be on the bull run of the century. I don't freaking know. But I'm not going to buy it, personally. Jobless claims are very important. Unemployment data is delayed. Jobless claims is not. Not really. Less delayed, I should say. It's still weekly delayed, but it's much more real look at inflation. Or, I'm sorry, into the labor market in real time. No, inflation has happened. I'm not mad at it for not selling things for $1 either. But again, I'm telling you, younger people do not buy from the dollar store most of the time in general, right? Most of them just buy stuff online now. And again, as more warehouses open up close to them and shipping becomes more efficient, people are going to shop there less and less and less. Pretty obvious, I think. All right, anyways, we're dropping down. We got the new lows here at 35 even here. NASDAQ's breaking down. Gold's pushing up. Things are starting to correct a little bit ahead of Jerome Powell and Jackson Hole Symposium tomorrow. I'm talking about both of them, Todd. We got Jerome Powell speaking tomorrow. Walmart CEO speaking right now. He said, we expect tariff-related costs to increase in the third and fourth quarters, keeping prices as low as we can for as long as we can amid tariffs. But that's the only thing really going on right now. Hey, bud. Love you, man. All right, bro. Love you, dude. Good day, buddy. Elon Musk says Autopilot version 14 launches next month and Grok 5 begins training next month as well. All right, guys, we got 13 minutes. Still testing this low of the day. Yeah, so Rick's Bank which is Sweden's central bank, thinks summer inflation was worse than expected. Hard to beat 125 for a lot of the stuff at Dollar Tree. Yeah, but the gas you used to get there probably eats that. All right, we got 12 minutes. All right, NASDAQ cracked lows again. It's still breaking down ahead of this jobless claims report in 12 minutes. Yeah, I've been to some small towns in Michigan, and Amazon is much less efficient out there. And so that's what's keeping some of these dollar stores alive. But eventually, we're going to get expansion as well, you know. NASDAQ still testing lows. We're at 230s. And here's NVIDIA. Gold is on the right side. NVIDIA is dipping down, going red on the day, too. Palantir going back red down to 155. NASDAQ still falling down. Apple, not really that down. Meta's falling down as well. A lot of AI stocks are dipping here. Tesla dumping down as well. It's at 321s right now. 321s. Walmart driving this after earnings. Missed EPS, beat revenue, but still reacting negatively here to this. Is AI in a bubble? It depends. It could be. It might be. I'm not saying it is. I think it depends on the time frame you're looking at. I think if I've said this 1,000 times, but I think it's important to kind of reinforce what I'm about to say. Companies that recognize right now that who controls AI is going to rule the world. That AI over the past 3-4 years has gotten exponentially better. And if you extrapolate that trend over 30 years, 20 years, even 15, 10 years, AI is going to get way better. And so what does that mean? That means that AI is going to run the world. And if a new technology is going to immediately start running the world, it's pretty justifiable to bet on it, in my opinion, right? And so while looking at things on average, PE ratios might be high in a lot of these AI and tech companies, and I understand that currently, which is why I said it depends on time frame. And sometimes the technology that ends up running the world still causes long-term bear markets and corrections, i.e. the dot-com crash, the dot-com boom and crash, right? 2000. We saw a correction in internet companies, even though when you look at internet companies rule the world today. But still in 2000, we had one of the largest bear markets in history. Good day. And so short term, could we be in a bubble? Sure. Long term, it's probably going to correct it on the upside. And so long term, it's going to grow into it is a better word for it. Most likely. Again, not an investment professional. I'm not liable if you lose. I have no idea what's going to happen. Don't copy me. But that's kind of my stance on it. Could we correct and have a bear market and crash from it? Sure. Will it eventually fill the gap? Yes, most likely, in my opinion. And you got to understand this, okay? Like, look, I'll go over something important right now. Here's the cue. You know how many people in my stream told me right here, that we were going to have the biggest bear market crash in history. Big banks even put out stuff saying, oh, we're going to enter a recession. It's going to be the end of the world, you know, blah, 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 blah. Right? People got mad at me when I told them that we didn't necessarily have to crash right here. And I started buying the dips right here. People got mad. They made fun of me. They talked smack. And then following this, we had one of the biggest bull runs in history with the AI boom. And you know who profited from it? The same banks that told people it was doom and gloom at this period of time right here. And so at a certain point, you got to watch what the banks do, not necessarily what they say. And you got to understand something here, which is that universally, somebody's putting out bearish predictions in markets. Anywhere and everywhere, somebody thinks we're going to crash. Whether we're on the precipice of a huge bull run or whether we actually are about to crash, somebody thinks we're about to crash. And you can't take that and, you know, maybe you missed out on the runs, maybe you missed out on the big bull runs, maybe you missed out on the big booms from AI or whatever it is, and have confirmation bias like, oh, it's not going to hold anyway. It might hold. It might keep running. It might keep running up way more as well, and you might miss out on stuff. Or maybe we do crash. There's variance. I don't freaking know. Nobody knows. You know, everybody wants to be the next big short crash market predictor. They want to be Michael Burry. They want to call the next big market crash, right? But it's so rare. How many influencers have you seen that said the market was going to crash and then the market does 20-30% the next year? I've seen them a lot of different ones. And so you got to understand something. It's very difficult to predict crashes. When they do, they make movies about it, like The Big Short, because it's so freaking rare and the probabilities are so low that you're going to get it right. It's really hard to time a crash correctly. There's signs, but it's not easy. And so you just don't want to fall into one of those people that always thinks we're going to crash because they missed out on some big gains in the market, right? Easiest way to make money on the market is not to time a crash and short it. That's the, no offense, but that's the dumbest way to make money because the probabilities are just against you. Easiest way to make money is just a dollar cost average into the market long term, regardless of whether we go up or down. Dollar cost averaging means you take periodic buys in specific time intervals regardless of price. Curbs volatility long term. That's the easiest way. But again, you don't want to fall into the trap of always thinking we're going to crash. Yeah, that's all I'm saying. Yeah, of course. I mean, if you keep throwing darts at a dartboard, eventually you're going to be right. So if you tell people the market's going to crash every other week, after a few, you know, after 5 years, you're probably going to call one eventually. But if your accuracy is 0.05% or 0.5% or even 5%, you're still down a lot if you took their advice every time. And so you just got to be smart. I'm not one of those people that just tells everybody the market's going to crash. Something that you see is like you get more views if you tell people the market's going to crash, right? And so what you see from some of these influencers is every other week they're telling you the market's about to crash. And if you look at the accuracy, it's usually like less than 1%. And so you just got to understand something. You just got to understand it, I mean. All right, gold pulling back a little bit. NASDAQ's bouncing up some. We got less than 5 minutes before jobless claims unemployment. And we'll see what we get. Surely over a long time they lose viewers. Not necessarily. I think sometimes the viewers start yelling manipulation. And, you know, it just gets really political fast. I'm very neutral politically. I'm not really a big pusher of politics. But nobody screams manipulation more than somebody that's wrong about a prediction. And I'm not even saying there's not been manipulation. The labor report revisions, I think, are kind of off. But I also think it has to do with how we pull the data and surveys, especially with the labor reports, you know. So it's nuanced. But we got less than 4 minutes left, guys. Jobless claims expected today at 225. Last time they were 224. Or wait, do I have that backwards? Yeah, we got a couple minutes left. Yeah, jobless claims expected at 225 to 226. Last time they showed up at 224. So we are expecting to see a slight upward push in terms of unemployment. See what we get. Give me your last minute predictions here, guys. We don't have that long. We got like 3.5 minutes left, maybe less than that. And so data's coming soon here. Hit the live button next to the play button. Make sure you put it in 2x speed to make sure you're not delayed on the stream. What's your last minute predictions? All right, guys, we got a little bit under 3 minutes left. Yeah, we'll see. 2.5 minutes. Hit the live button next to the play button again. Put it in 2x speed. You'll catch up to the stream. Make sure you're in real time. All right, 2 minutes. Here we go. We got the NASDAQ up here. I'll put the SPY up here, and then we got gold up on the right. That these markets do. We'll watch yields as well, of course. Under 2 minutes. All right, guys. A minute and a half left. Minute and a half left. Looking at our poll before this data shows up here, 61% think weaker, about 39% think stronger. All right, guys, here we go. About a minute left. All right, previously jobless claims were 224K. Continuing claims are also big. Versus an expectation. Continuing claims expected at 1.96 million. Previous of 1.953 million. All right, guys, here we go. We got less than 30 seconds left here. Here we go. 20 seconds. 20 seconds. See we show up here. 15 seconds. Hit the live button next to the play button. Make sure you put it. This timer's a little early. We got about 8 seconds left. Hit the live button. Make sure you're real time, guys. We'll see what this data shows up as. All right, here we go. Philly Fed index is well expected at 6.8, and here's the report right here. So Philly Fed ended up showing a negative 0.3 versus 6.8. Negative 0.3 versus 6.8, so much weaker than expected. Jobless claims 235 versus 226 expected. 225 or 235 versus 225 expected, basically. Way weaker than expected. Way higher unemployment claims than expected. Continuing claims also showed up kind of weak at 1.972 million. 1.972 million. Again, 235K versus 226 expected. 1.972 million. So way weaker than expected. Honestly, this might mean earlier cuts. Maybe this means the market's going up because it wants rate cuts. You know, again, continuing claims higher than expected. Initial claims 235 versus 226. Philly Fed index also showed weaker manufacturing than expected as well. So wasn't necessarily good data here at all. Noticeably higher than expected. Well, this data means more people are filing for unemployment than expected. It showed 235K, about 10,000 more unemployment claims than expected versus 225,000 expected. Initial claims also showed noticeably higher than expected, and the Philly Fed Business Index showed negative 0.3 versus 7 expected, so weaker there as well. We got a slight uptick, though. But again, the market probably The market could like this report just because of higher increased odds of rate cuts is what this means. If we take a look at yields, I'm sure yields are decreasing on this report because it's weaker. And if you take a look at yields, yeah. If you take a look at yields, yields are going down on this report. Look at yields drop. The NASDAQ honestly isn't down. Maybe it means earlier rate cuts is what people could interpret this as. But again, I'll put this data up on screen. Initial jobless claims, 235,000 versus expected 225K. Showing higher unemployment claims versus expectations. All right, there you go. You can see this scrolling at the bottom of the screen now. Yields are going down too. Again, this showed weaker labor market than expected. More people filing for unemployment than expected. So we're kind of bad news is good news here. Weak labor market makes the market react positively, which again is probably because of rate cut dynamics. If the market wants rate cuts, and we have justifiable rate cut data, which is weaker labor market shows more justifiable rate cuts, maybe Powell's going to be less hawkish than expected, and that might actually make the market go up a little bit. But again, if you want to see like how people are interpreting this data in terms of rate sentiment, yields are decreasing now. They're under 4.3% on this report, which again does show they're interpreting it the same way. They're interpreting it more bullish for rate cuts, if that makes sense. Yeah, I think that's it as well. I think the market wants rate cuts. And I think that's what we're seeing here. Higher probability of rate cuts. Look at the NASDAQ pump. Yields are down. NASDAQ is up here on this data. Let's take a look at Bitcoin. Is Bitcoin going up on this report? Yes, as it should. I mean, Bitcoin wants rate cuts and QE and all that stuff too. Yeah, so again, this is pretty good data here. Pretty good data. Again, if you want to check out Top Step and help support the channel, listen, we cover everything for free. We don't sell a course. We don't sell a service. We don't claim to be experts. We have one sponsor. Check out Top Step. If you want to learn to day trade, don't fund your own account thousands of dollars and probably lose it. Instead, try Top Step. Most day traders lose, regardless of where you go, including Top Step, probably. But that's pretty expected since 95% of day traders lose. And so in that regard, it makes no sense to fund your own account thousands of dollars. Why? Because you're probably going to lose it. Instead, try Top Step. They give you a 50K demo. They test your skill. You pass the test. They fund you 50K, 90% split. And this teaches you how to trade taking this challenge. If you fail the challenge, you lose 50 bucks. So you're risking something, but it's not the end of the world. And it's kind of the best of both worlds. Limited risk at 50 bucks a month for the base one. If you pass it, you get a 50K funded account. You get to keep your first 10K following that and 90% split afterwards, which is similar to funding your own account. They pay out millions, fund thousands. Their new dashboard allows you to process payouts quickly. You can track payouts as well on there. You get a reset bank now and a bunch of other cool stuff. Just a great way to learn how to day trade. Most day traders lose. And so check them out. They are a sponsor of mine. They pay me money. I am biased. I can't guarantee anything. You know, top 3 most biased person ever, but great way to learn. Here's the link though. Check it out. I'll pin it to the top of the chat. All right, guys. So the NASDAQ is pumping up here. Look at this. We went right up to this 70 level. Let's see what we do. Yields are still falling down. They're at 4.3% right now. We're watching yields. Gold is ripping up on this report. And forgive the Christmas music here. I don't know why they're throwing up Christmas music in here. President's gonna have to fire AI. Yeah, I mean, AI is naturally gonna take jobs away. It's gonna create jobs in sectors as well, of course. Like, I'm sure the microchip sector and jobs in the microchip sector have grown massively. And so it's I'm not gonna say it's a complete scratch there, but it's gonna create jobs as well for sure. It's also gonna enable people to make money. It's gonna enable entrepreneurship in a much faster way. You know, like if you think about how many people are now creating their own jobs through AI, right? It's gonna compensate at least a little bit for it. what you're going to see is more entrepreneurs, less people working for companies, which I don't necessarily think that's a bad thing. But of course, the people that are just used to working for other companies versus starting their own are going to struggle a little bit from AI naturally. But, you know, eventually that dynamic will fluctuate and change. All right, catching up in the chat. Yeah, no borrower is expected to come to market with investment grade bond offerings, according to Bloomberg. Also, guys, make sure you give me a follow on x.com at Beginner Trades. We cover all this data live at Beginner Trades, BEGINNERTRADES, at Beginner Trades on X. We appreciate the follow there. Thanks so much. Yeah, so rate cut odds actually follow yields, just to put this into perspective. And yields are down from this report if we take a look at them. Yeah, yields are down on this report. They're under 4.3% as of now. Yeah, look at yields continuing to fall, as they should be. I mean, again, this shows lower interest rate sentiment. If we take a look at the actual CME watch tool, this might go up. So we might see the odds for a September cut increase after this jobless claims. I don't know how much, but we might see it. Yeah, we got PMI at 945 as well. Yes, sir. Purchasing Managers Index might influence things. I don't think it's going to influence things as much as... I don't think it's going to influence things nearly as much as jobless claims might, but it could. You never know. It's not the ISM data. ISM PMI is bigger than I think it's Market Economics that does the regular PMI report. So if it was the ISM data, maybe, but it being just the regular data, I don't know. Yeah, we're going to keep watching yields to see for reversals there. And Powell speaks tomorrow, right? We want to hear what Powell's got to say about all this stuff. Sometimes the first move is the wrong move with this data as well. So, like, look at this. Nasdaq's coming down. Let's watch this 235 level, see if it holds. But sometimes the first move is the wrong move. Originally, we pumped up on weaker unemployment data. Worse unemployment data, I would say, in terms of, you know, economics. And we ended up retracing this whole thing down now. He speaks tomorrow. Can you explain what yields are? Yields are bond yields. So the interest rate at which bonds are paying out is what yields are. I like looking at the 10-year yields, which is what you see me bring up on the screen. But they correlate with interest rates. And one of the most important correlations to understand in finance is that yields and interest rates follow each other for the most part. And so something that shows a lower interest rate sentiment means yields are decreasing. And something that shows a higher interest rate sentiment means yields are increasing. There's also an inverse correlation between bond prices and yields. So if bond prices are going down, yields are going up, which shows a higher interest rate sentiment, and vice versa. If bond prices are going up, that means yields are going down, which means if we take a look at, since yields are going down, we can take a look at TLT, and it's probably going up right now. Yep. Which TLT is longer term yields than 10, but they always kind of correlate a little bit. And again, you can kind of see from this 830 report, bond prices are up, yields are down, which shows a lower interest rate sentiment following this report, as it should. Weaker unemployment data shows weakening in the labor market, which is one of the more justifiable reasons to cut rates. You kind of need price stability as well, which we don't necessarily have, especially after the PPI report. But But that's what it is. Will this change Powell's tune tomorrow? Will this change Powell's tune? I don't know. I don't think so. I think Powell's going to be hawkish regardless of this data. It certainly opens the door a little bit more for it, but I don't think it's going to change his tune. Won't cut. Yeah, I mean, I think we got too much stuff coming out to determine whether he's going to cut or not. I talked about this. I talked about this with somebody yesterday. And well, let's talk about it for a second. All right, so a couple things. I don't think the decision is set in stone right now. In terms of, like, in regards to what we're doing next month in the September rate decision. I don't think we know right now what we're going to do. I think we have too much data, not even including Jackson Hole tomorrow, which I expect Powell to kind of be hawkish / neutral data dependent, refusing to commit is what I expect him to be. And he's going to definitely say inflation's still elevated, and he's going to reference PPI at least once, most likely. But excluding Jackson Hole tomorrow, which we're going to stream live. Again, hit the subscribe button. You know you want to try it one time. But excluding Jackson Hole tomorrow, next week we have what the Fed looks at to gauge inflation, which is called PCE, Personal Consumption Expenditure Inflation. Core PCE is what the Fed looks at. That's going to matter, right? That's what the Fed looks at. If that data shows elevation in inflation, that's going to decrease the odds of a rate cut in September a lot, right? We also have GDP. If GDP shows super strength for the previous quarter, that might decrease the odds of rates. Not as much, of course, as a more closer look at the labor market, but still it could. And not only that, but next month, early next month, we get another labor report. So one of the reasons the odds of rate cuts spiked over the past few weeks is because we got a 258,000 revision to the labor report. Showed more weakness in May and June. And we get the first updated look at that labor report since those revisions last month. And so in the context of all that stuff, or since early this month, I should say, sorry. And so in the context of all that stuff, we also have Goldman Sachs expecting a 500,000 to 1 million revision downward to the labor report. I think it's either September 7th or 9th. That's incredibly important as well. And again, the FOMC meeting is going to be on September 17th. And so we got too much stuff coming out to commit to any specific path for rates. And I think Jerome Powell is probably going to say something similar. Powell doesn't usually like to give direct answers. And again, just to clarify, I think we probably should cut based off of labor report week. So I don't think it's super obvious, but I think we should probably cut a small amount. I think we should either cut or we should end quantitative tightening, especially in MBSs, because some of the most big criticisms we're seeing right now for the economy is mortgage rates. You want mortgage rates to decrease in the QT, the sell-off of mortgage-backed securities. That'll help mortgage rates go down. I think that's something we should do. But if we're going to pause, I think we should end QT. If we're not going to end QT, I think we should cut 25 basis points. That's my stance. And again, but I don't think it's incredibly obvious. All right, guys, NASDAQ's now turning down, about to test lows of the day. We'll see what happens. It's May, so his term is up in May. He still might stay on as a governor, I think, or Fed governor, or whatever it's called. Unemployment claims might be big. Might be a big yellow letter scrolling at the bottom of this. What do you guys think we should do? Should we cut next month? All right, so we're seeing yields come back up a little bit now, though, guys. Yields have rebounded. They're still net down from this report, but they're rebounding back up. You can see bond prices actually pull back a little bit. Raise rates? I don't think we should raise. I think we should pause. I think you should get nominated for Fed chair. Fed chair only makes $200,000 a year. I'm not saying that's chopped liver, but like, for that much public scrutiny, you better pay me $500,000. I would do it for free. I've said this before. Of course, they're never gonna hire me, but I'd do it for free, just because of the influence. Well, bonds are still net down from this report. Tell me about PMI, the Purchasing Managers Index. Kelly. If I did, I'd get I get a lot of interest if I did. Yeah, we had jobless claims, unemployment. We got PMI, the Purchasing Managers Index, dropping at 945 today. It's not the most important one, though. The big one's the ISM, the Institute of Supply Management Data, which is not today. Today's, I think, is brought to you by Market Economics. And so it's less influential. But it's somewhat relevant. We'll see what happens. PMI is usually over 50 expansion in that sector. If it's services, it's an expansion in services. The more over 50 it is. If it's under 50, it's a contraction in those sectors. If it's manufacturing, it's below 50, a contraction in manufacturing. It drops at 945 today. But again, this is not the big one that people want to pay attention to necessarily. I mean, it's important. We'll cover it as soon as it drops, as we always do. You should subscribe regardless, because we cover all this stuff live as soon as it happens. But yeah. Jay Powell's net worth is 55 mil. Yeah, but that's not from being the Fed chairman. His net worth is that big because he ran an investment bank for a long time. So. Yeah, I bought Target, my average price there, and we've scaled out of 50% of it. My average price is in the 94s. I'll take a little bit off the Target right now, actually. Probably should. Just based off of the volatility that we get over the few weeks. We're just gonna lock in more profit. People think 3% is more. Oh, in the last 10 years, you got to understand something here, which is that you got to understand the story of economics. You know, you got to understand everything that's happened. People are used to 2.5%, 3% mortgages. Sure, that's what they're used to. Part of it is from 2008 and the correction from the reaction to 2008, if that makes sense, followed by, you know, 2020. Super low interest rate environment. The lockdowns happened. People panicked. They sent out checks. They did all these things that spiked inflation by 2022. And then the Fed had to pivot to the other side and go hawkish, restrictive, raise rates, and then pause them at restrictive levels for a while, for a year straight, really. They did this to combat the inflation that we got from 2020, which was brought upon by rate cuts, quantitative easing, stimulus checks, supply chain problems. All of that stuff spiked inflation. And so, you know, once inflation gets up to almost 10%, you know, we're not going to get a low interest rate environment anymore. It's not normal to expect it, and we haven't really had sub 4% interest rates since then. And really, that's what spiked inflation. Inflation can go down. I say this every day, but Inflation doesn't go down, it slows down. And so people are still stuck with the high inflation that was brought upon by all that stuff right now. That's why a lot of people are still unhappy, is from all the craziness from back then. And I think a certain amount of people still expect prices to literally go down. But unless we enter a deep recession and depression, that's not happening in most sectors. All right, I'm watching 235s. We're still testing these lows. You see yields continue to go up and bond prices continue to fall and decrease. Market getting baked into hawkish Powell potentially is what I think this is. Well, this jobless claims report wasn't hawkish necessarily, Lucas. But what I think this means is that the people fear hawkish Powell more tomorrow than they did the weak labor report and unemployment report that we got today. Jobless claims is a week-to-week unemployment filing report. So one spike in unemployment is not necessarily the end of the world week to week. It shows some negative signs for labor, for sure. But it's not the worst thing that could ever happen. I think there's going to be much more influence in regards to what Powell says tomorrow at 10 a.m. than the labor report, jobless claims, unemployment report showed today. And I think bonds, and I think the market and bonds have been reacting to this potentially, but I think a lot of stuff's getting baked in. You know, a lot of stuff in the markets, buy the rumor, sell the news. You might hear that a lot, buy the rumor, sell the news. That means we'll go up in anticipation of something, and then once the thing happens, we'll do the opposite. And so I think markets are getting baked into a potentially hawkish Powell now, and that is making people freak out. A lot of people are going to be yelling. The Philly Fed was hawkish as well. Yeah, it was negative versus a positive 7 expected. Still decreasing, testing lows of the day now in the NASDAQ. Everything's kind of coming back down still. Yeah, I mean, I'm not going to get into that V. Too political. I'm neutral on all that stuff. I don't know. Yeah, this jobless claims report is higher. It certainly pushes rate cut odds in terms of yields a little bit, but it hasn't influenced them that much. I think people still kind of neutral on this. They're still expecting about 80-20 right now, but it could change with Powell tomorrow. Afraid some... No, I'm not. I mean, Tina, I don't care about any of that stuff. I know you're kind of being sarcastic, but I'm very neutral politically. Even outside of this live stream, I'm very neutral politically. I don't root for one side like it's my football team, like a lot of people do. I don't pivot to any specific side. I look at policy. I'm a capitalist in nature. But I also, you know, am socially left in some ways too, right? Like it depends on which policy it is. I'm very neutral. I don't get involved with it. I'm not stressing myself out about politics long term. And once you get to the tippity top, everybody's the same anyway. So I don't care about any of that stuff. NASDAQ starting to bounce back. We're almost at 235s. Yeah, I know. You were being sarcastic. It's all good. I know. If bad labor numbers carry into high inflation, the inflation numbers carry more weight in general when considering a cut. Per the Fed minutes right now, I believe yes. PPI might not be the inflation metric that you want to look at to gauge it, though. It depends on which inflation metric you're looking at, right? If we're looking at PCE inflation and that shows up super elevated next week, I think that holds a lot of weight. A lot of weight. And again, we'll be streaming PCE just like we did jobless claims today at 8:30. Next Friday, we're going to be streaming PCE. And so we're going to get a look at it. But yes, I would say inflation, even in the Fed minutes report, one of the things they said, and to be fair, this was prior to the revisions in the labor report and the weakness signs showing up in the labor report. But to be fair, but is what I meant to say. In the Fed minutes report yesterday, the Fed literally said they see downside risks to the labor market and economy, upside risks to inflation, but they're more fearful of the inflation numbers than they are of the labor market weakness. And they said that directly in the Fed minutes report that we covered yesterday. And so, yeah. All right, we're starting to break down. We're at 23,219s. Still consolidating right at these lows. Yeah, I mean, I think we're probably a stagflation environment, which is a period of economic state in which we have high inflation and weak labor markets simultaneously. Sometimes can precede a recession. It usually follows a restrictive economic policy. I mean, I got political beliefs, but if I told my political beliefs, both sides would probably dislike me because they're not really weighted and they go by policy. And so in some ways I agree with both sides, and in some ways I disagree, to be honest. Like, I'm a capitalist. I don't think there's ever been really a socialistic state in which has succeeded, really. Now, there's social policies that can kind of work sometimes. But I think capitalism generally creates a high quality of living for people in those societies. And at least with capitalism, the people who get the power have to work for it to a certain extent. Again, generally, that's usually the truth. In socialism and other economic states, a lot of the time they're just blindly given the power, and so they respect it less, and there's more, there's more sketchiness that goes on. But there's going to be corruption on both sides, right? On either one of those states. So some of them have pros and cons. But on the other end of that, just to contradict myself, I think healthcare could be free. I've lived in Canada before, and they've got, people give them crap for it, but they actually have a pretty good system there. It's not as bad as it could be. It's certainly less expensive. But like I said, both sides will hate me if I told the truth about it. And I think most reasonable people are somewhere in the middle. Gold's pushing up right now. Nasdaq's testing lows. Yields are starting to decrease a little bit. Yeah, no, it's all good. All right, so we're starting to break down. We're at 23,002. Just crack lows. Yeah, we just cracked lows again. Gold spiking up. But again, with that said, I'm going to pivot away from this political conversation. Again, I really am neutral. I'm not just pretending to be on stream. I'm generally pretty neutral. All right, so we're starting to bounce back up. Yeah, let me put NVIDIA up. I'm looking at bonds right now because bonds indicate where interest rates are going. Here's NVIDIA at the top. It's down a lot over the last few hours. All right, so Solana is expected to win the SEC's ETF nod in the fall in the wake of recent Bitcoin and other ETH approvals, according to the information. I'm seeing that news come out right now. All right, NASDAQ spike it up at 210s. We got a couple minutes into the opening bell. We're going to be day trading live at the bell today. We'll see what that looks like. Yeah, I mean, AI is going to run the world, brother. That's very self-evident, I think, at this point. AI is going to run the world. That's just kind of how it's going to go. And so whoever controls that is going to rule it. And again, this is the natural state of technological evolution. People are going to get upset about it. When the carriage was replaced by the automobile, people were upset about that too. It doesn't mean we shouldn't have to drive cars. It's kind of what happens over time. And again, my only hiccup is I hope these companies make sure that AI do not have defense mechanisms, you know, which I've seen some rumors and rumblings of that, which makes me nervous. I've seen Terminator too many times, but Terminator 2 arguably better, but you know, I think you look at them in a different light now that AI's here, as you should. Yeah, so the Fed President Jeffrey Schmidt indicated Thursday that the Federal Reserve is not in a hurry to cut interest rates, citing inflation that remains above their 2% target and a solid labor market. No, 100%. We saw that earlier. Something that you'll see from Fed members is that it just depends on which side they're on. You know, you'll see like dissenters like Bowman and Waller, and they'll kind of reiterate what the president wants. And then you got the other members on the other side, some of the other members on the other side that kind of go the opposite of it. They kind of reiterate what Powell wants. It's all kind of political and job posturing. You know, Bowman and Waller, I think, want that next Fed chair job, or at least one of them does. And so what you see right now is that a lot of you see a lot of the people in the running for the next chairman job, they're coming out basically just, you know, they're coming out pushing for rate cuts. You know, they're trying to gain favor and maybe win that next seat. So that's kind of what you see going on right now, is that it's posturing from a lot of different sides and members right now. Again, jobless claims came out about 35 minutes ago, showed higher jobless claims filings than expected. Week to week came in at 235 versus 225 expected. Thousands, that's in the thousands. Initial claims came in noticeably higher than expected as well. The Philly Fed data showed weaker data than expected for, you know, labor and manufacturing. So all signs should have pointed to higher increased odds of rate cuts. But yields are actually down a little bit now. Or yields are actually up a little bit now from this. And the odds of rate cuts have actually decreased a little bit. 79.1. Again, I think the market is going to start adjusting into Jerome Powell tomorrow, is what we're going to see. And that's what we're seeing now. That's why the rate odds, even though we had a weaker labor report, which should mean higher probability of cuts, after that data came out, we originally reacted negatively. But I think as we get closer to tomorrow, you're going to start seeing yields go up potentially, because people are going to expect hawkishness from Jerome Powell. They're going to expect inflation-fearing Powell, which means less likely of rate cuts next month. So it's super nuanced right now. It's very back and forth. And so just be careful. See what the market gives us today, though. Yeah, I mean, I started day trading years and years ago. You know, years ago, I put up about $4,000 trying to day trade penny stocks. And because I ate up a lot of the media at the time around penny stocks, I thought I was going to be some day trading guru savant, you know. Instead, I just lost that 4K in like 3 weeks. And so that's actually what I created this channel, is because I created it like everybody else is acting like gurus. I'm just going to tell people I suck and see what happens. And that ended up working. Obviously, at this point, it's grown a lot. And yeah, that's how I started it. Eventually, I went from penny stocks to day trading the SPY and Q. And then after that, I eventually learned there's no PDT role in futures, pivoted to that. And now we're here, you know, trading futures. But I really love economics, obviously. I like trading. I like finance in general. And so I swing trade, I day trade, I do all that stuff now. Nasdaq's starting to bounce back up a little bit. Let's see if it holds these bottoms here. Nvidia earnings is next Wednesday evening, poker. He was so much thinner then. I was, bro, honestly. If you look at me back then, I was smaller. You know, when I was when I was like 19, 20, I was like 130 pounds, 135 pounds. All right, so S&P Global Ratings analyst says the economic impact of tariffs will be key for future sovereign rating actions. So we got that news coming out. Nasdaq's starting to rebound. Oh, it was fun. I remember popping open my computer trying to day trade penny stocks. You get this big rush of like, ooh, you know, I'm going to get rich today. At the end of it, you almost cried. I remember I lost that $4,000 quick. Carol told me not to do it too. And $4,000 at the time was so much money for me. Like $4,000, dude. I couldn't imagine losing that at the time. And then I did. Almost cried. If Carol wasn't there, I might have cried, to be honest. It ended up working out though, because this YouTube channel has probably made me so much more than that over time that it's a blessing regardless. But it kind of goes to show day trading takes time, you know, and penny stocks are incredibly volatile. There's so much variance, and most people make money marketing penny stock day trading versus actually making money day trading penny stocks. All right, guys. Hey, we got 20 minutes left. 20 minutes. See what happens. Yeah, and then AMC and GameStop happened, and that helped grow this channel a lot. I covered AMC, GameStop in the early days of those squeezes and runs. But I talked about this yesterday. They kind of turned on me because I sold at like 550, 520 or something like that for GameStop. I can't remember where I sold, but it was up there. And I had like thousands of people watching the stream from the GameStop and squeeze community that they all just turned on me as soon as I sold. And I remember telling them at the time, like, look, you can pressure people not to sell, but we're at freaking 520 for GameStop. I'm selling. And then we never, we went maybe slightly higher, but never quite much higher than that. And then we just never got anywhere close to that again. And so in hindsight, I sold at almost the perfect time. Of course, they'll never tell me that, but you know, we sold almost at the perfect time. Did I make Roaring Kitty money from it? Of course not. If I did, you wouldn't be seeing me streaming right now. Or if I was streaming, I'd be gambling like crazy. But we still sold at the right time. Let's see what my water bill is looking like right now. Bull or bear on John's water bill? This is my current water bill right now. It's lower than it was, I'll tell you that. This ain't actually that bad of a month. This is my water bill right now. $4.60. About 1,200 gallons a day. So the Bulls were right. Say that, but yeah, I got a pool. I have a pool, and my wife, I affectionately refer to as the plant murderer. She buys up a bunch of plants, creates these big water systems that flood the yard, but then doesn't water the plants. You know, I love her, but man, water bill spikes because of that. All right, guys. Hey, we got 18 minutes. I'll probably wait till the open to trade. We'll see how it goes. You don't. I'll put it this way: if you think my water bill's high, you don't even want to see my electricity bill. Adobe. What do I think of Adobe? I'm kind of mixed on Adobe. And I said the same story back when it was 400 a share. I think Adobe's done some good things. They've done the best they can. But a lot of Adobe's business is going to get replaced by AI. Now, they've adopted that AI and used it in their systems, and that's great. But regardless, I think the net effect of Adobe is going to be losing business from AI systems. And I think this is pretty obvious too. You know, Photoshop's big and all that stuff, and that's cool. But people don't need it as much now with AI. AI will do a lot of the stuff for them. You got Canva and other stuff taken off over the last few years. And so even with them surrounding themselves and their tools with AI, I still think they're going to lose business. But I think we've already corrected some from this. We're down from 500 down to 350s this year. You know, a little bit less than 5. Well, we opened up actually about, but it's still down a lot. But I don't know where it's going to stop. I think maybe eventually we'll get a bounce. But I do think Adobe is going to lose business from AI. And I think that we're already seeing corrections from that. And so I'm kind of neutral on Adobe. We've already corrected from $600 down to 350s in the last few years, from 700s back in 2022. So the AI corrections already happened, and maybe we're at a bottom now. But if the AI growth continues long term, I still think there's some risks for Adobe. So I'm kind of neutral. All right, we're going to day trade the opening bell live. We'll see what we get. Intel's too volatile recently. For me personally, I'm just not interested in buying Intel. All right, guys, we're testing 233. Of course. I know you're being sarcastic, Ashley, but that's so ridiculous. Of course not. I was given intel years and years ago by one of my aunts. I never made a dime. Yeah. Bailey, with all respect, I'm not getting into that either. I think we should be easy on millionaires and tax billionaires more. But that's about all I'm going to give you there. Yeah, I'm not touching Intel right now. I think we should get rid of property tax is what I think we should get rid of, personally. If my grandmother buys a house and I don't have any grandmothers left, right? Rest in peace. But if my grandmother bought a house in 1950, and now that house is worth $800,000, in Texas especially, an $800,000 house is going to have to pay around 2.5%. We'll call it 2.4% a year. You're going to make my grandmother pay 20 grand a freaking year, bro, just to keep that house? Nonsense. When we're already paying sales and an income tax, get rid of property tax. That's the tax I dislike the most. But I'd support getting rid of income tax too. Feel like I'm in an AI stimulation where everyone except me is crazy. We might be in a simulation. Don't get me into the simulation talks. But I used to think it was nonsense, and then I started thinking about like all these things that people make fun of, and I'm not saying that's true, but people make fun of horoscopes. If horoscopes are true, we're in a simulation. The only justifiable, like the only thing that makes sense in horoscopes is if we're in a simulation, and that's the way they order things in terms of personality. I don't know though, bro. The question you got to ask is whether we're in base reality, whether this is the first time we're building these type of systems, or whether it's the most probable thing that we've done this before. And, you know, some people say it's like 1 billion to 1 on the ladder. But who knows, man? All right, so we're starting to head up. Gold's still pushing up. Yeah, well, Rusty, that doesn't necessarily contradict what I'm saying either. People look at it like they do, but I think that makes more sense with what I just said too, you know? All right, we're at 240s. 240s. So you believe in quantitative easing, Bert? Y'all think we should do QE? We got 8 minutes left. Is it time for QE? Let me know. All right, we're up to almost 250. Watch 250. 250's rejected us a couple times. If you're pushing for QE right now, I know you're in crypto. Because QE is the last thing we should do right now. I'm sorry, crypto people. Listen, I like Bitcoin. I hold Bitcoin. I hold a bunch of other cryptos too. But we should not do quantitative easing money printing right now. Absolutely not. If inflation is a problem, we should never do QE right now. It's going to make inflation much worse. QE will spike inflation more than anything else. Except for maybe, like, checks. You know. Yeah. Jerome Powell tomorrow. Big. Like, I ended up buying these magnets for cauliflower ear from training jiu-jitsu. And now I just kind of twirl them like poker chips. They're kind of like a fidget thing. Like, look, I can spiral it. As long as I don't break my computer with them, I guess I'm okay. All right, NVIDIA's starting to rebound up. We're at 174.50s. We got 6 minutes left, chat. I'm going to wait to trade. We're kind of sideways right now. We could continue downward, or we could rebound. So I'm kind of neutral here in day trading. I got to wait until we get some volatility from the opening bell is what I'm waiting for. Why you hear me rambling about nonsense. Do they work? Yes. They work. Put them on your ear. If your ear swells, they'll keep the liquid out of them. Because with cauliflower ear, once it hardens, you're stuck with that. You're not getting it out. You're going to have big, crazy ears for the rest of your life. And so, I don't want that, necessarily. No offense to you if you have it, but maybe I should stop muscling out of chokes. It's probably... We are due for a bounce? Maybe. Maybe we are. I don't know. We're down the last 2 days, but I think that's people getting baked into hawkish Powell potentially tomorrow. Data dependent, less commitment to rate cuts. Powell is what I think people are getting baked into. I think that's why the market has fallen the last few days. People are, understand the significance of Jerome Powell tomorrow, and they also understand he'll probably be hawkish and restrictive, and so the market's going down because it's less likelihood of rate cuts, and the market wants rate cuts. I don't care how tough I look. I don't want it. Yeah. My ears have swollen a couple different times. Mostly this ear right here. Swollen a couple different times. Alright, so we're bouncing off of 235. Again, still very sideways. I'm a blue belt, but I'm a new blue belt. Top 3 worst blue belt ever. Alright, we're at 250, so let's see if this holds. Isn't there a middle way? Yeah, there's balance. We could end quantitative tightening, which is the Fed unloading the Okay. Quantitative easing is money printing, in which the Fed creates online bank reserves and then they use that to buy up a bunch of bonds and MBSs. And that injects liquidity, helps bring interest rates down in a more desperate way than just straight up cutting the federal funds rate would. The consequence is inflation, and so if it happens on the other end and we need to be desperate about it, we can do quantitative tightening, which is the reduction of the Fed's balance sheet. It's basically the Fed letting their bonds mature and run off and not buying more. And it's a restrictive, hawkish, higher interest rate pushing thing, which we're still doing, right? And so if you want balance, we could either cut 25, small amount, and continue QT, or we could end QT and pause, right? And so what I expect actually for September is maybe we're not going to necessarily cut if we get some bad data from here to now, or from now to then. But if we don't cut, we're probably going to end quantitative tightening. And again, it's all going to be dependent on, I think, next week's PCE inflation, next month's labor report. I think there's a lot of stuff that matter coming out over the next 3 weeks that are going to influence things. All right, guys, we got 2.5 minutes. 2 minutes. I'm a blue belt in Brazilian Jiu-jitsu, and so we don't kick boards, you know. Jiu-jitsu is actually really fun. I'm not going to talk about it because I'll rant about it all day, but it's kind of like video games. Sparring. You spar a lot, roll a lot. It's fun. Yeah, Nvidia's heading back up. Look at Apple's spike here. So Apple just spiked substantially here. I don't really see any news to cause this. Look at Apple spiking. Dow got his price target raised. Again, we got a U.S.-European trade deal. Joint statement terms. They didn't quite agree to it, but they agreed on the terms. Yields are starting to correct a little bit. Apple spike it up. We're at that 200 exponential, though. I'm going to wait until the opening bell. We got less than a minute, though, chat. I agree, Tina. I think it does make you a better human. That's why I got my kids, both of them, in it. My son doesn't quite like it as much right now, but I think he'll like it as he gets older. All right, we're at 257s here, 257s. Yeah, we're somewhere in the middle. All right, there's the opening bell, guys. Let's see what we get. Apple spike it up ahead of the open. Watch this level right here. 275 or so, 273, 275. 200 exponential is also right here at 266 on a 1 minute chart. Apple spike it up at the opening bell. We got Nvidia moving up a little bit at the opening bell as well. Gold's also moving up. Doesn't mean it's going to hold, though. We'll see what happens on the rest of these. The report was, it was bad in terms of the labor market. All right, look at Apple turn, give up all the gains it made over the last 5 minutes. Nvidia turning down too, technically red on the day. Apple now technically red on the day. NASDAQ turning down right at that 200 exponential, and we're testing lows of the day again already. The weakness now at the opening bell. Crack lows just now. We're at 23.2s. Let's see if we bounce at that whole dollar number here. I gotta draw some levels now. I would short this right here at 235. Look at 235 reject. But we're too close to the bell. Nvidia heading up, testing highs of the day now. We got up to 245s. Projecting back down here. Can't tell if this is a Christmas song or not. I hear like a slight bell in there. Is this a Christmas song, guys? Let me know. Target breaking down. Look, good move for selling. And here goes yields. Since the opening bell, yields are back down. Since the open. Back down to 4.3% today, which was lower than they were. So we have corrected back to the downside on yields, which is a lower interest rate sentiment. We're 3 minutes into the day. I'm waiting 5 minutes to trade. So I will trade, but I got to wait until that opening volatility is done. president just posted. He said it's very hard. Again, I'm quoting him. He said the president says, quote, "It is very hard, if not impossible, to win overseas conflict without attacking an invader's country. There is no chance of winning. It is like that with Ukraine and Russia," end quote. Yeah, I mean, you see it with like Napoleon in Russia. Napoleon took over the world, or at least Europe, and then tried to go to Russia. But Russia was used to the cold. They just waited it out. They waited for France to get tired and cold. Waited for supply chains to break down. And they're in their home country, so they're used to the cold, right? And Napoleon ended up retreating out of there pretty quick. Interesting story. NASDAQ pushing up. We're at 273s. At this level, we'll see what happens. Apple bouncing back. Nvidia's actually pushing up a little bit. It's at 176 now, testing highs of the day. Let's see if it continues. Now look at 270 level. Look at this level hold. This looks strong. I might buy this. We're gonna buy into this here, but I gotta cut it quickly. We're gonna take 2 contracts only. If we pop back up there, but if we fall too fast, cut it. I'm gonna cover half of this and give this last piece a little bit longer and add to it if we get into the green. We got a lot of ground to recover on the downside, but we'll see. We're gonna add right here. All right, so we got 2 contracts here. We pop back up now. All right, we're gonna cut this now. There's just too great of a chance we start testing lows. I'm just gonna start sticking with my levels here. Small loss on the day though. We'll see if we can win it back. Look at Apple turn. Apple all the way down to 225s. Now we're ripping back up. Yeah, we're kind of chopping back and forth right now. Maybe some indecision. Go at that 200 exponential level though. Watch 23 threes up here. If we start to bounce back, maybe 23 threes will be a level we test. Might try to buy up 235s if we can get it. Didn't really get it. It looks like we're gonna test this level up here now, but if I could have bought it down here, I would, but it looks like we're gonna move up to test this now. Tested it. So we're long here. I'll show you the other trade I'm in. This one. Tested it. I'll hold this close to break even, but I want to see another retest of that level up there. There we go. I cut it right there. Pretty much flat on the day now. But If we get over this level and hold, I'm gonna start looking at like 23.3. Nvidia's churning up though. That's one of the big moves that's going on right now in markets. We can hold up here. Jobless claims numbers showed a weaker labor market than expected. A weaker labor market than expected. We'll buy a 273 dip with a tight risk here. Looking for a retest of 23.3s. We might not get it, but if we get a pullback there, we'll buy it. There we go. We just bought this dip. We'll add a little bit more to it right here. See if we pop back up fast. Green, let's see if it holds. There we go, half off there. Let's scalp in these moves since we're so close to the open, but we're green now. Candle showing up, let's see if we bounce. Got the 200 exponential down there too, so we're kind of flat in this position now. I'll give it a second to bounce there though. I cut half of my position mostly flat here. Risk off, and then see if we rebound back at the 200 exponential like a lot of people think we might. Flat on this piece now too, close to at least. There we go. Bit more room. Kind of ambiguous what we're gonna do right now though. I'm gonna cut this. That's a big drop. If we bounce right here though, yeah, like we cut that just in time. And buy up to. There's 250. A nice green trade. We'll cut this here. All right, so the French President Macron spoke with Indian Prime Minister Modi and coordinated positions. Hello? All right, sorry. So I'm seeing some U.S. tariffs on European Union could increase wholesale wine and spirit prices over 80 cents per gallon, according to Reuters. That 35 level has been holding really well all day. Look at that bounce right there. All right, remember guys, I forgot we have manufacturing and services PMI data at 9:45. So yeah, we got manufacturing and services PMI both at 9:45. All right, guys. Yeah, we got this data coming out pretty soon here. All right, guys, so we're kind of consolidating here. We got 2 minutes left. Yeah, I got a bunch of screens. I usually don't allow anybody to plug anything, JB. I'll allow it just because it's a Louisianian. All right, U.S. officials notes defense chiefs from Finland, France, Germany, Italy, UK, Ukraine, and U.S. develop military options to support negotiations for lasting peace in Europe. All right, guys, here we go. It's not that big, to be honest. We got a minute left. Manufacturing services expected at 49.7. Services expected at 54. All right, guys, we got 40 seconds left. $23,250 pulling down there. $15 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream chat. We'll see what this data shows. It's not the biggest data, but I'll cover it as soon as it drops. All right, here we go. 3, 2, 1. Okay, so services and manufacturing both showed stronger than expected. So manufacturing data, 53.3 versus 49.7 expected. So manufacturing services PMI data showed 55.4 versus 54.2. So PMI data is out. PMI data is out. NASDAQ does not like this report at all. It's dropping big here on this report, all the way down to 205s. I'll put this data up on screen, but again, it showed a much stronger manufacturing and services sector than expected. 49.7 versus 53.3 for manufacturing, 55.4 versus 54.2 for services. Much stronger services and manufacturing data than expected here. So, yeah, I'll put this data up on screen. There it is in chat right now. We'll put the manufacturing data. Flash data, 53.3. Let's take a look at what yields are doing on this report. I'll put this data up on the bottom now as well. Here's services. Here's manufacturing. We also had global composite show up at stronger than expected as well, 55.4 versus 55.1. Let's take a look at what yields are doing on this report. Oh my god, there's 10-year yields. Yields are spiking on this report, which as they should. I mean, they're showing a stronger economic state than expected through PMI data here. Look at yields go up. So yields are increasing. NASDAQ decreased here, probably because they want rate cuts. I'm gonna short this right here. Like half off just to protect, since we got so deep in my favor all of a sudden. We'll let it try to work down as it spikes up. So we lost a little bit on that trade. Kind of a weird sideways choppy market though, so y'all just be careful. Give me a follow at Beginner Trades. We'll post all of this stuff live as it happens. I don't know what to do with this market. I don't know whether to short or long. It's very neutral. Buy up this 535 level maybe now. I'll take a longer term trade here and see if this plays out. This market's just back and forth here. Trying to increase. There we go. All right, we're gonna cut that right there. We're now technically green on the day. What I've realized about my trading is that I need to just follow the levels I have on charts. Because like if I play them right, like we retrace fast to this level right here. I bought it and wrote it up to this level, right? And then look, we're at this level, the top level now, and then look at the rejection here. So I'm just gonna start playing the range between my levels, and they're very short term, but we can get some good edge if we catch one right. Also, check out Top Step if you want to help support the channel. No PDT and futures. You can day trade the S&P, NASDAQ, Dow, Russell, gold. And again, most day traders lose money. Doesn't matter what course you take, who you follow, most day traders lose. You can either fund your own account trying to look cool, or you can try Top Step. Top Step, $50 a month for the base when you get a 50K funded account if you pass it. If you fail it, you lose $50. So it's the best of both worlds. Limited risk, similar reward to funding your own account at 90% split once you're funded, and you get to keep your first 10K prior to that split kicking in. Great way to learn. They pay out millions, fund thousands, zero commission on Top Step X. Trading futures, you can get around the PDT rule. You can day trade the S&P, NASDAQ, Dow, Russell, gold. Just a beautiful way. The patterns are very similar to day trading stocks, and their new dashboard is really nice. You can track payouts, activate funded accounts immediately. You get a reset bank. Their new dashboard is really, really nice. Really, really nice. But again, I get paid by them. I'm biased. Genuinely useful for traders, though. But understand all this stuff on screen. I can't guarantee anything. Not an investment professional. This is only my third plug in 3 hours. We're averaging about 1 an hour. I think that's reasonable. Like I always tell people, like, listen. Would you trust somebody that tells you they just like helping people? Like, I just like teaching, guys. Or would you trust somebody that's honest and like, yo, I'm here to make money? Of course I am. Anybody spending 4 hours on YouTube every day, 5 hours, 6 hours, is doing this to earn from it. Of course. That's a reasonable expectation. So I'm just gonna be honest. But Top Step, genuinely useful for traders. No PDT rule. Again, a lot of people fund their own account $5,000, lose that. I think this just makes more sense. Market's very sideways, chat. I'm not really, I mean, I'm slightly green on the day. I'm trying to hold steady here. But yeah. Oh, I'm trying to, I mean, I'm not trying to sell my own stuff. I don't even claim to be a good day trader. The president just bought 100 million in bonds while in office, so he's thinking rate cuts coming. right, so we're scrolling down on the NASDAQ here. We're at 220, 220. Very tight range here. Hard to get over that 200 exponential. Yields are going up now after this report. You see yields spike up here. Here's 10 a.m. right now. We're up a little bit. Or 9:45 is right here, I mean. We're elevated from this report, as we should be. Showed a stronger manufacturing and services sectors. Yeah, it's 5 days of $150. You need 5 wins of $150 days to process a withdrawal, which is much more reasonable than most places, as well as previously it was 200. They reduced it to 150 from their previous dashboard. Let's see if we reject 935 now and start edging towards lows. Apple, everything's very sideways. I think I had a Jerome Powell today. Yeah, Jackson Hole's going to matter a lot. Hey, we had some people tune in for this event. We had 11,000 total views for the stream, so shout out to you guys. Appreciate the love, man. Shows you if you tell people you're the top 3 worst trader ever and you give people free information, it goes to show you can grow a YouTube channel telling people you have no idea what you're talking about and still grow. All right, guys. Why Jackson Hole matters a lot? Jackson Hole matters a lot because in the last 3 weeks, I'm going to cover this and then I'm going to get out of here. It matters because in the last 3 weeks, we've had contradictory data. Market president pushing for rate cuts, but we've also seen some other data that contradicts that, right? So we've seen a really weak payroll revision. So originally they had May and June this past year at like 115, 120,000 jobs. Those were all revised downward, under 20K for both of them for May and June, showing a much, much weaker picture of the labor market in May and June than they had previously reported. This caused some problems everywhere, of course. People started freaking out. And obviously rate cut odds spiked substantially after this revision report and another weak labor report for last month in July as well. And so everybody was like dead set on rate cuts after that. Following that, PPI inflation was terrible, absolutely terrible. It showed a massive spike to wholesale pricing, way worse than expected, way worse than last time. 0.9%, almost 1% increase month to month for both core and regular PPI inflation. And so now people are kind of stuck in the middle. A lot of people are yelling stagflation, which is an economic state in which we have high inflation and weak labor market, kind of the opposite of the dual mandate. And you know, of course, the president is pushing for cuts. We had weak jobless claims data today. Again, higher jobless claims than expected today. And so a lot of things are just contradictory right now. And where we're going to get a deeper picture potentially into what we might do in September is going to be tomorrow at Jackson Hole. We'll stream the entire thing live as we do. Yeah, just be ready. That's what we got going on tomorrow. Be ready. It's big. See what happens. All right, guys. NASDAQ starting to test lows here. Again, we will see what we get. Yeah, we'll see what we get. And yeah, y'all just be ready. Also, guys, we're going to end the stream. Again, check out Top Step. You want to help support the channel. We're going to end the stream. And it should immediately redirect you to the the next stream that we're holding tomorrow, where we're going to cover Jackson Hole live as it happens. And so it should immediately redirect you guys. Let me make sure it does here. And so again, you can wait for that, or you can just join us back tomorrow morning bright and early. We do have some data coming out at 10 a.m. We got existing home sales data coming out at 10 a.m. expected at 3.92 million. I'm going to cover that really quickly before we cut out of here. And then again, as soon as we end this stream, it's going to pivot you to tomorrow's stream. So. All right, guys, less than 1 minute. Less than 1 minute. Yeah, y'all be careful. It's very choppy and sideways. I don't trust this breakdown, but it could happen. Nvidia's flushing under 175s. But yeah, just be careful. All right, guys, 30 seconds until existing home sales data comes out. Y'all get your mind out the gutter, okay? This is an innocent economic and trading channel here. Now get out of here. I'm from Louisiana, bro. 225, Louisiana. Existing home sales coming out in 10 seconds. Let's see what they show up as. Less than that, really. Expected at 3.92 million for July. 3.92 million. It ended up showing up at 4.01 million, higher than expected for existing home sales at 4.01 versus 3.92 million expected for existing home sales. So actually stronger existing home sales than expected at 4.01 million versus 3.92 million expected. U.S. leading index should have been negative 0.1%. Again, I'm going to get out of here. Again, stronger home sales at 4.01% versus 3.92 expected. Existing home sales up 2% month over month versus negative 2.7% last time. So I'm going to get out of here. I'm here to give you data. You're welcome. Subscribe. You know you want to. Everything we do here is free. We don't charge for anything. So I appreciate the love. Thanks so much. And yeah, have a great day.